Hello, welcome back to the video. Welcome back to the channel where we keep everything as simple as possible. Hashtag keep it simple. In this video, I'm going to do three things. Number one, I am going to break down this chart with our model, exactly how we took opportunities from right here and this one and this trade here. Then number two, I am going to look at this aspect of lot sizing. That's what we are going to look at. And in conclusion, number three, I am also going to talk a little bit of psychology of a trader's mindset in the markets. So let's get going. Right before you is I submit a chart for GBP USD on the 15 minutes time frame, published on October 23rd, 2023. First things first, what we usually do is when given such kind of setup, we first of all draw our model. Let's begin with this setup here. We said the bullish version of our trading model is drawn like this. Right? That's how it's drawn. Where we said they have a sweep of liquidity. This first leg, break of structure here. On this lower low, we take our trade. We ride it. Potential take profit with this higher high. That's what we said. Looking at this chart, I don't know this line. Okay, this line, I'm very sure this line here is not just for was not drawn just for to just beautify the chart, for just lipstick. No, this was a sweep of liquidity right here from a higher time frame perspective. Remember, we are on the 15 minutes time frame. So with a sweep of liquidity, after the sweep of liquidity, we keen with the charts. We find the first break of structure, which we find right here. Right? That first break of structure has a lower low, of course, which is here. This is where we take our entry, we take our trade. Our stop loss, we said we should set it this protected lower low. Then our target, potentially, we are targeting this high right here. This is what we said. This is how it sweep of liquidity, sweep of liquidity, first break of structure, first break of structure. This lower low for the first break of structure, lower low for the first break of structure. We ride market, potentially target is here. This is it. This is it. This is it right here. That was the bullish version of the trading model. The bearish version, we drew it like this. This is exactly how we drew it. This is exactly how we drew it, like this. A sweep of liquidity, a first break of structure. You take your trade here, you ride, potentially, you target this place. So, This was kind of sweep of liquidity because I don't know exactly what is happening on the higher time frame, but let's make an assumption that there was a sweep of liquidity because of this guy here. I usually place this rectangle with a sweep of liquidity on top of it. So with a sweep of liquidity, we have a clear first break of structure. See it here. Then its higher high becomes the potential sell order entry point, which we transforms to this place. Ta-da! We sweep it, then we ride. Our potential target is this lower low. But I also remember saying you should know your bias. The current trend, is the market trading up or is the market trading down? Now, we had a sweep of liquidity right there, right? As you can see. And it had a break of structure, a clear high, ta-da, there's a taker entry. Potential target is here. Yep. I am reminding again you that you should know your bias and you should know where to secure take profit. Now, on aspect number 2, which I was to talk about, is something to do with lot sizing, right? So I'm going to say this, assuming that you have a concept, at least a clue of what lot sizing is. Because see a trade like this one. I remember this high was taken. This one worked. This high was taken. Yeah. This market took this high. This market was bullish. This market was bullish. Remember this high being taken. And now, if you had placed a sell limit here, and you're targeting this low to be taken, what would have happened to you? You have made a stop loss. You could have hit a stop loss. Now, this right here, where you took this trade, riding it to this point with GBP USD, I believe this around estimate, yeah. Estimate. Maybe you can do your math. This is 1.214 450 might take away from, assume it was here, your order was triggered here, depending on the broker you're using, 800. So 800, you take away 450, there's around 350, yeah? There's around 35 pips. This move right here. This move from here, where you took your trade to where this market tried to reverse, there's around 35 pips. 35 pips. How much would have 35 pips undo? Is 35 pips not enough for you? And for also this one right here, we took your trade here and maybe you left your trade here. How much would that have been? You take let's imagine it was triggered. Let's imagine it was triggered here at 21,750. Take away 550. 750 minus 550, or 750 minus 550. That's 200. Those are around 20 pips. How much would have 20 pips earned you? Are you trading to catch many pips, or are you trading just to catch few pips? Let me put all this in perspective with this picture here. You see, if the market moves 10 pips, if the market moves 10 pips as shown here, only 10 pips, when you use a lot size of 0.01, you win $1. Remember, it's 10 pips. When you use a lot size of 0.1 with the same 10 pips, you get $10. And when you use a lot size, one lot, the standard lot, to catch the same 10 pip movement, that's just even a second movement here, is you earn $100. The same 10 pips. Okay, let me show you exactly what 10 pips mean in this chart. Remember, we just proved that this from here to here is 35 pips. From here to here is 20 pips. From somewhere around here to here is 20 pips. So 10 pips will be around here halfway. If your trade was triggered right here and you left the market here around 10 pips and you used lot 10, this is what you could have earned. Lot 10, same 10 pips, that's $1,000. $1,000 is good for the day, for a week. For some of us, that's good money. And with the same $10, with the same 10 pips, same pip movement, 10 pips, and you use lot 100, you use 100 lots, what do you get? $10,000. When you convert that $10,000 in my local currency, Kenya shillings, right now, that's 1.5 M. That's 1.5 million in a single move. In a what? How long was this candle? How long was this candle? How long was this candle? When we took a trade here, right? Your trade was triggered here. Then, see, this is 15 minutes because we are working on a 15 minutes time frame. So this one here, this one candle, this is number 2. Candle number 2, hit our take profit. There's a 30 minutes. So you make $10,000 converted to our local currency. That's 1.5 million in 30 minutes. How much? How long would it have taken you if you were employed someone to get 1.5 million? Yeah, it is a little bit crazy, right? So my point is, the point I'm trying to put across here is that know when to stop. Know when to stop. Take your money and stop. Because if you were to stay in this market, like Sasa, you're expecting this low to be taken. Of course, you could have. These are lows. You could take in a lows, are very good lows, yeah, very good lows. So you take here, you take your stop loss here. You could have made a loss, and also here. catch few pips with a proper lot size, you are good to go. That is good. And if it were 35 pips, 35 pips using lot size 10, let's see that 35 pips using lot size 10, could have that been 10 pips, 10 lot size, 10 lots will have earned you $1,000. $35 will have 35 pips could have earned you this $1,000 times 35, yeah, that is $3,500. Yeah, that 3.5 M in here, my friend. That is good money. Take your money and stop. As a trader, you should know when to stop, because winning is addictive. Winning is addictive. Mark that. When you make this, when you catch this 10 pips with 10 lots, and you make your money, close your charts and go do something else. Okay, do something else apart from placing. Don't even think of placing another trade. That one trade is enough for you. That's one trade. One trade is enough to keep your psychology, your mind at a good mood, a good psychological level. You don't have to lose the money to tilt your psychology again. Just take that one trade. When you win, stop, close your charts, or go back and tape read. Just tape read for the whole. Just watch those markets and watch your pattern printing. That's a form. That's one way of building confidence with your strategy. Winning is addictive, as I've said. You will be tempted always to open other trades, but that only usually happens for those guys who have weak mindset. Those guys who are greedy. And you see the problem of winning? You tend to ignore all the red flags which the market provides before your eyes. You tend to be overconfident, right? You tend to be willfully blind. Willful blindness, that is it. You tend to start having a feeling like you've beaten the market, you've beaten the algorithm. Ignore all the red flags. You even start breaking your own rules. You break your own rules, which you set. You strip yourself of even taking responsibility. You break your rules, you lose, right? What happens when you lose? It pains, it hurts. You're hurt, be in pain, hate yourself. When you hate yourself, you tend to go back. You tell yourself, now I will, okay, I'm going to place another. You tend to have you tend to move into a revenge trading way. You're placing a trade, trying to revenge yourself. to revenge for the loss that you've made. But you know, the market doesn't care. See, every moment is unique. You can even take another loss. Because what does that, when you start thinking like this market has taken something out of you, eh? You go there, you even break your rules, you lose again, you pain, yeah. Mm-hmm. You lose everything, then you throw your hands on the air. You blow your account, yeah, and you start saying that trading is a scam, yeah. That is exactly what happens. That's only something that could have been prevented by stopping. Same way, when you are predefining your risk, yeah. Same way, when you're predefining how much you want to lose in markets, you should also predefine when to stop. You should also predefine how many trades you're taking in a day. And when you do, just stop it. Stop and do something else. It's just as simple as that. Just go spend that money. Just go spend that money with someone you care about. Yeah. Go do some investment with that money. That is exactly what the best way of maintaining your mindset at check in the markets. That's what I can say of today, and thank you for watching. Yeah, thank you for watching, and see you in the next video. Thank you. Bye.